Next up, the federal income tax brackets. So, you may not be aware, even though we've gone through how taxes work many, many times on this podcast, that the IRS has the ability to change those tax brackets from year to year. And the Tax Cuts and Job Act actually brought them down and reduced the income brackets in terms of how much you pay in terms of a percentage. And in some instances, it even increased the amount of income you could claim at the lower levels in terms of what you pay. So those were due to expire, those tax brackets, at the end of the Tax Cut and Jobs Act, which is the end of this year, 2025. But the One Big Beautiful Bill Act has made those permanent. So instead of trying to figure out what it could be increased to over the years, and we've talked about how do I predict what I might pay in the future, you now have, at least until Congress overturns it, some level of certainty that the federal tax brackets are going to be set at 10%, 22%, 24%, 32%, 35%, and 37%. And we will put in the show notes a link so you can see what income falls within those brackets in the year 2025 based on your filing status. Along that same vein, where we're talking about tax brackets, is the standard deduction. So you will recall that the standard deduction is an amount of income that you can use to reduce the income on which you pay taxes, regardless of your tax status. So whether you're single, married filing jointly, married filing separately, everybody has access to a standard deduction at some level. That standard deduction was almost doubled through the Tax Cut and Jobs Act. Again, that was due to expire at the end of 2025. This bill has made that increase permanent, and it will be indexed for inflation. So more and more people, especially if you're not, again, a really, really high income earning taxpayer in a state that charges state income tax, will choose to use this standard deduction because they'll get more benefit from it than writing out all of their itemized deductions, unless, again, they earn a lot of money, have a really expensive home where they pay a lot of mortgage interest, give a tremendous amount to charity. That's kind of the profile of a person who might choose to itemize, but otherwise they will likely choose the standard deduction because of this increase.